Welcome to this week's Forex forecast for the week ending January 27th, 2023. My name is Justin Bennett with Daily Price Action, and a bit of housekeeping before we get into the markets. Last week I mentioned that I would be inviting all of the members from the old Daily Price Action website into the new one, and I sent out an email on Friday to everyone who was a part of that old group. Okay, now if you did not receive an email, be sure to check the email address that you used to sign up to Daily Price Action originally, and also be sure to check your spam folder, promotion tab, whatever it may be within your email provider, because that email was sent with all of the access instructions. And if you're still having trouble, be sure to use the contact page on the website and I will respond to you as soon as possible. And if you're not a member and you never were, but you're interested in joining, be sure to check out the website, click on that big orange button at the top that says join today, and it will have all the details on how to join. All right, so with that out of the way, let's go ahead and get into the markets here. Looking at the EURUSD, a very sideways market. Really, it's the same story that we talked about last week, where the market right now, the euro, is holding below that trend line from late 2016. Okay, so this is going to be the level to get above right now for bulls. So in order for this short-term uptrend to continue, we need to see the EURUSD close above this area around 1.087 to expose levels like this pivot up here right around 1.112. Okay, so on the weekly time frame, you can see that this would be the next target if we do get that close above 1.087. And as for support moving forward, like I said last week, this area around 1.078 and also 1.07, because that was the previous range high. Okay, so you can see back here, this was our range high, which is now serving as support for the euro. So any rotation lower, I think you have to be careful trying to short this market while it's above these two levels here. Like I said last week, a close below 1.07. Okay, if we saw some weakness here from the euro, then a close below 1.07 would turn this into a fake out, and we could get that move down toward 1.048. Okay, but with the momentum right now, with the bullish momentum, it does favor bulls right now. But like I said, we do need to close above 1.087, just because this entire week we saw the EURUSD moving between these two levels. It's holding up incredibly well here, technically speaking, but we do need that breakout to give us some momentum. Until that time, this is really just a chop fest. And if you're trying to trade the euro, unless you're selling up here, buying down here, then you're going to get chopped up very easily. Okay, so I will say, if I had to guess here, I would say that obviously the bullish momentum is intact here short term, and just the fact that the EURUSD is not selling off from this area and just consolidating below resistance, a lot of times when you see this, you do get a bullish breakout. Okay, so keep that in mind too. Higher highs and higher lows, trying to short this right now without a close below 1.07 is ill-advised in my opinion. Really, I'm looking for a close above 1.087 for a potential move up toward 1.112. But we do need that confirmation first. Again, trying to trade this market right now is really very challenging, if not altogether unfavorable. So next up we have the British pound, and GBP last week did put in some higher highs and higher lows here short term. It also closed above 1.23. Okay, so this was the level that was on our radar, but I did say that it was a challenging pair to trade just because the market has been so sideways really for, the past 2 months or so. The market has just been moving sideways here, so it has been a difficult pair to trade. Especially with how choppy it's been. However, again, like the EURUSD, the short-term uptrend is intact, so you have to be aware of that, and trying to short this market right now is ill-advised unless we got to close below this area down here, okay, that trend line. But right now, 1.023 is going to be support. We saw a close back above this level last week, okay, so you can see that right here, back here it was resistance, okay, we got a fake out above this area, the sell-off, and now this level has flipped back to support. Okay, so 1.23 is the level to watch this week. Any rotation there will likely attract buyers, and a close above 1.245 is going to be required to open up higher levels like that area right around 1.267. All right, so pretty easy to see here. If we move out on the daily time frame, you can see that we've got this high, which is currently serving as resistance. We saw that tested on Wednesday. So a close above this area opens up this swing high up around 1.267. Alternatively, a close back below 1.23 would signal weakness, but like I said before, we would need a close below this confluence of support around 1.21 to open up downside targets. And right now, the bullish momentum is intact for the pound. So next up, let's talk about the dollar versus the yen. And I really love the technicals here. In fact, they're some of the best in the currency market right now. They have been for quite some time. And you can see, looking at the weekly time frame, that we have a long-term trend line that comes off of the January 2021 low. Okay, so this low back here, we've got several touches through this area and then also here. So the market is kind of coming into this area, slowly but surely coming into this area right around 125. This is going to be a huge area for the dollar yen over the coming weeks. Okay, so I would be very careful getting too bearish on this market while it comes into that 125 area, because I do think that it is going to be incredibly significant for the dollar yen here over the weeks. Now, you'll also notice that if we move back here and look at the high from 2015, this area also coincides with that region. Okay, so the high from back here is right around 125. So this is a massive support area for the dollar yen. All right, now if we look at the daily time frame, this is what I mentioned last week. You can see that we have a potential falling wedge. It's a very slight pattern, but it does technically qualify. Okay, so you can see that we've got this lower level off of several lows through here. Okay, so this area this week around 126.70 all the way down here toward 125 is going to be support for the dollar yen, and resistance is once again the 130.60 level, which I've talked about several times. So you can see we've got support here, support, the market broke down, and now we have resistance twice last week, okay, including Friday, which tested that area right on the dot. So, the same thing here for the dollar yen. It's going to take a close above 130.60 to confirm the breakout. So it would have to close up here, but like I said, don't discount the possibility of one more leg lower here into 125, into this confluence of support before we get that bounce. Okay, but this trend line is going to continue to be significant. So if you're looking to play the breakout, a bullish breakout from the dollar yen, you could either look for bullish price action down here, although the risk to reward ratio at that point would not be favorable. Really, ideally, in my opinion, you're looking for a close above this trend line, okay? But 130.60, regardless of when the market breaks out of this, if it does, this area up here at 130.60 is going to be significant. So if we got the bullish break from the dollar yen over the coming days and weeks, then you're looking at 130.60 as resistance. Above that, we've got that 134.50 area. Alternatively, if we saw the dollar yen break below this area down here on the higher time frames, okay, close below it, then that would be a confirmed breakdown, and we could be looking at much lower levels for the dollar yen. But like I said, this is going to be a very strong area for this pair, so be really careful getting too bearish with the market not far off that level. So next up, I want to talk about the Australian dollar, and I want to start here on the monthly time frame, because this is something I've mentioned recently in recent blog posts, and you can see where on the monthly chart, 70.30 is very significant for the Australian dollar. Now, on the daily time frame, it's not quite as significant, okay, but on the monthly, this is a huge pivot for this pair. All right, now you can see on the daily time frame, this is what I mentioned last week. We saw the breakout here from this 68.70 area. Okay, so this was the previous range high. We got the breakout, the close on this candle, and then we got the retest as new support right here. And I wrote about this when we got that breakout. Okay, we got the breakout here, retest, and our target from that was that 70.30 area, which you can see was tested on Wednesday. We got the bearish rejection candle and the retest down here at that same level. Okay, so the technicals here are really nice. And even though the Australian dollar is trading right in the middle of this range, okay, making it unfavorable, this is not the time you want to trade. Okay, if you're looking for, to trade this market in a range, you want to be looking for shorts up here and longs down here. This, when the market is in the middle of a range, you do not want to touch a market that's trading right there in the middle, okay? But for the Australian dollar, the reason I'm pointing this out this week is because of the technicals here, okay? We've got a very clear invalidation level for this uptrend right there at 68.70, and we've also got resistance up here at 70.30, okay? So we know that a close below this area down here would invalidate the uptrend, at least short term, and open up levels like this one way down here around 66.50, whereas a close above 70.30, okay, could open up areas like 71.30. Okay, and if we got a higher time frame close above that, then we're probably looking at a move from the Australian dollar even higher back here towards some of these highs right around 72.60. Okay, but first, the market right now is just within this range, so I would expect some more range-bound trading here, before we get potentially a breakout above this area or again below this area around 68.70 to negate the bullish momentum here, at least short term. Okay, so that's what I'm looking at right now. Again, really nice range play right now from the Australian dollar between that 68.70 area and 70.30 resistance. And lastly, I want to talk about the SPX 500. This is S&P futures. We talked about this last week. I pointed out this all-time high trend line that everybody is watching right now. And sure enough, we got the sell-off. Okay, so last week, the market was trading right around this area here. I mentioned that 40.20 was going to be resistance, and sure enough, we saw a high of 40.15. Okay, so pretty darn close to that level. We got the sell-off down here into the support region. Now, the market did close just below 39.10 last week on Thursday. Okay, but the key here is you can see back here, we've got these highs. So this right here was not necessarily a confirmed breakdown because we would have needed to see the SPX close down here back within this range. Okay, and we didn't get that. So on Friday, we saw a really nice bounce here from risk assets back here toward this trend line. So going forward this week, the 4,000 area is going to be incredibly significant, that all-time high trend line. It is going to take a daily close above this in order to expose that monthly pivot around 41.40 and potentially the August swing high up here around 4,300. Okay, so this swing high would come into play if the market were to get above 41.40 over the coming weeks. But first, this 4,000 area is going to be very significant for the coming week. And this is going to matter for the currency market, make no mistake about it, because the SPX tends to move inversely to the DXY, the US dollar index. Okay, so if we know this moves inversely to the DXY, and the EURUSD, for example, moves inversely to the DXY, then this market tends to move with the euro. Okay, so if we get the SPX closing above this area up here, all right, this week and opening up 41.40 and potentially higher, then that could also push, pairs like the EURUSD out of this range. Okay, up there toward 1.112. Same thing with the pound. Okay, it could push these markets higher. So we've got to keep an eye on SPX in the coming week. Now, alternatively, obviously, if we saw a rotation lower from this level, we're looking at this area between 38.90 and 39.10 or so as support. Below that, we've got that massive confluence of support down here right around 37.80. All right, so that's it for this week's video. If you enjoyed the content, be sure to subscribe to the channel and click the like button. And again, if you were a member of the old Daily Price Action website, be sure to check your email for those access instructions to the new site. All right, everyone, I hope this content has helped trade well out there this week, and I will see you on the website.